Okay, this is Brant. I'm back from tradegold.blogspot.com, and we're back with ISV. And what we're going to take a look at now is the Snapsheets here, and we're going to see what the fundamental data is saying. And the first thing that really jumps out off the page to me is this period between June and July. We saw on this institutional holdings, we saw it go from about, I don't know, maybe 13% here to close to 19%. So that was a huge jump. Something was going on there. And if we look at that corresponding period between June and July, what we'll see is that we were still declining. So they were buying, apparently, it looks like, into this decline, into this transition of a base. So it suggests to me that they're buying weakness as you'd expect them to do, and they're getting in early on a position of accumulation and possibly into a position of markup where they will kind of dole those shares out to retail investors. Also on the snap sheets, we can see that, let me just equalize all these panes. Here's the short interest down here. We can see that it jumped really, this orange indicator in August from something like 4 days to 11 days to cover. So a thick short position has moved in on this price pattern. Let's take a closer look here. That may be part of what we're seeing here in this decline. I don't know for sure. But with the institutional holdings, what are they sitting at right now? About 18%. There's lots of room for them to buy more. There's lots of room for them to kind of drive this price up. So I like ISV. I don't like the recent action of it, but we'll have to just put in a stop and see where that leads us. At this point, I think I would use that 50-day moving average as my stop, and that's somewhere around the $1.58 level, I would say. So keep an eye on ISV. I'm going to just switch my notes here. Let's see what I want to show you next. This is a new position for me, OCPI. And, if we're taking a look here at a longer, that's just Snapsheets loading up all those clicks. But if we look at a longer view here, we can see that there was a nice period of accumulation here back in '05. And then we had our period of markup. And there's a big spike. Those are always worrisome. And that's our period of distribution. Here's decline. And it looks like we're entering, again, a period of accumulation over here. If we take a little bit of a closer look at it, one of the things that always interests me and suggests to me that maybe we're forming a base is when this 50-day moving average, although it did cross below the 200, and that is not a good sign, it is flattened out. Now, when this 22-day moving average crosses above it, we might be, talking some serious position here. But in any case, I like OCPI. I'm in it early. I don't see this as a trade. I don't see anything spectacular on the chart that suggests that we're going somewhere anytime soon. But it's a nice base. I like what I see there. If we look at a 3-day chart, you can see this climax selling over here. This is most likely churning in distribution up in this top, and there's our climax selling. So it's very probable that we have seen a near-term bottom for this, or a long-term bottom for OCPI. That's what I believe anyway. If we take a look at the accumulation distribution indicators on OCPI, you can see in May there's bright red selling here as we make these price declines, and more or less it's transition from May to June, from heavy selling to heavy buying. And we've also got in time segmented volume a nice little divergence here. You see how low it is at May, and then we make this lower low over here in August, and that indicator is heading higher, suggesting that even though we're making lower lows, there's more buying now than there was back then, and we saw that there was significant buying back then with BOP. So let's take a look at the snap sheet and see what that says. Okay, so here we have price in the top window. We have insiders, percentage held in blue. We have percentage held institutions in red, and the short interest in orange. So what I'm seeing right off the bat, I see insiders have been selling. So, that's kind of it's not a good thing. One thing's for sure, they're not selling because they think the price is going up, but they are maybe getting out for other reasons other than just doom and gloom. We can see though, almost proportionally, actually quite a bit more than proportionally, just proportionally in time, the institutional holdings have really jumped here, and they've gone from in the beginning of June from about 12% to about 31%. So in that June time frame, if we take a look at the chart, that's very much this base that I'm talking about, where we would expect to see accumulation. So we've seen an institutional position almost triple, and there's still lots of room on the upside for them to add. The insider selling, I think in this case, going from about 55% to maybe 45%, that's still a huge inside position. So we like to see that. The short interest here is now up around 10 days to cover. So it's possible that that also helps us on any eventual breakout, that the shorts are going to have to cover those positions. So all in all, that's why I like OCPI. I know a lot of people have been asking, they haven't really seen the setup in it, and that's because it's not really there other than a nice long base. Next up, I think I have a couple minutes on this video. I'm going to show you HYC, and this is Hypercom Corporation, and basically our premise for this trade was that this was a head and shoulders top. Over here there's the breakdown. We wanted to short it up here at this neckline. It actually penetrated the neckline, but as I talked about in the last video, a couple of videos ago that were posted today, we saw that distribution early in September here, or late August, and we jumped on that and shorted it, and we're at a pretty profitable position, and I've exited it. But what's kind of interesting here, and we'll look at this a little bit closer, in these accumulation distribution indicators, TSV had a failure at this May top. Look how TSV went from March, April down to a lower position in May, June. As price from March, April to June was making higher highs, we were seeing less buying support in that, and that's also evidenced by BOP here. You can see a nice big buying with this high, and then you can see it's tapered off throughout this head and shoulders. Time segmented volume has tapered off, but that right there is the negative divergence that serves as a warning. Subsequently, of course, in August we got the breakdown, big selling like you'd expect to see. Money stream is plunged down, and it's actually in a leading divergence now between this point where price is higher, the indicator's lower, that's a leading divergence. So ultimately, we want to short this again on a little bit of strength on low volume, and hopefully get in for the next wave down. Let's take a look at Snapsheets while we have about a minute and a half left here, and let's see what we can see in Snapsheets. What I see is on the institutional ownership, and I'm just going to go ahead and raise this up, make it a little bit bigger. In August, right here, we actually had a bump in institutional ownership that went from about 86% to about 89%. So this little bump from 86 to 89% in institutional ownership, to me, if we look at it in August, it looks very much like this little bump that we saw right here. And what I'm thinking, maybe, and this is a lagging indicator, so by a little bit anyway, we're dealing with averages. So I think maybe what we saw was a bump right in here on this buying. We could see a little bit of a ascent in TSV and money stream. Possibly, pure speculation, possibly they were trying to hit the ask and drive price up to unload some shares. I don't know that to be a fact, but in any case, that's going to do it for this video. I will be back with another.